Good afternoon, everyone. I hope I'm audible. You can give me a confirmation on chat with a yes or a no. Thank you. We'll be starting off shortly. Once again, thank you all for joining. We're just waiting for the rest of them to join. Once we get a few more people, we can start off. Thank you. All right, I think we are good to go. Once again, thank you all for your cooperation. Mr. Vishwanath, I hope you can hear me. You can give me a confirmation.
Yes, sir. You can hear.
Oh, okay, wonderful, sir. Thank you. So, good afternoon, everyone. I hope I'm audible. First of all, I would like to thank everyone for joining us for today's webinar organized by WeP. We look forward to a wonderful session with all of you. I'd like to thank our knowledge partner, Lakshmikumaran Sridharan, for joining us today. I am Siddharth and I handle the product marketing at WeP. You can move to the next slide, Mr. Vishwanath. So before we get into today's topic with Mr. Vishwanath, I'd like to give a small introduction, a very small briefing about the company. So WeP Solutions is a 20-year-old company as of today. It was initially known as Wipro e-Peripherals, which was part of Wipro itself. And in 2000, we became an independent entity itself. So as you can see on the screen, we have multiple solution offerings for businesses. So we have enterprise as well as retail. So we cover both. And to give you a quick overview, first off, we have managed print services, followed by digital transformation solutions, intelligent office automation solutions, and lastly, retail billing solutions. So to give you a small gist of all of this, let me start off with retail billing solutions at the bottom. So here we manufacture billing machines for retail stores, Kirana stores, and we have close to 2 lakh customers pan India. Moving on to the corporate side, we have web managed print services. The business here is such that we deal with printing hardware based on requirement for enterprises, and you will be charged per print. That aside, we provide full service and support as well. So here we serve close to 600 plus odd customers pan India, and we are number one in India on that part. Also, WeP Solutions offers the latest range of best-selling intelligent office automation solutions. So here we are actually the authorized distributor alongside Ricoh, that is Ricoh Japan, to sell Ricoh products in India. And here we have a wide range of enterprise digital printing, office automation, and industrial solutions on offer. And lastly, we have web digital transformation solutions. That is, yeah, you can move to the next slide, Mr. Vishwanath. So like I mentioned earlier, we have two services mainly here. First off being GST solutions, that is the taxation solutions, and the second one being document management solutions. So to give you a small gist again, let me start off with document management solutions. Here we offer tailored custom solutions with the help of low-code development platform and offer document management as the name suggests. We also provide solutions for business process automation, business intelligence, and digital signature. So underneath this, as a layer, we have solutions for smart content collaboration, procure to pay, management of change, and employee records management. All this clearly aligned to simplify business processes. Now, the second product being related to GST, we in fact hold the license called GSP, that is GST Suvidha Provider, from the government and appointed by the GSTN itself. So here, our tool provides a host of features such as filing, reconciliation, data preparation, 100 plus methods of validation, that is data validation, e-way bill automation, e-invoicing as a package, and ERP integration as well. So this aside, we also take up managed GSTR filing, wherein you give us the data, we prepare it, we validate it, and then give it back to you for filing. So that is on the side of introduction. Now, I'd like to introduce our chief speaker for the webinar. In fact, following our successful webinars over the last few months, this is in fact our fourth webinar with Mr. Vishwanath since November 2020. So to give you a small introduction about Mr. Vishwanath, so Mr. Vishwanath here is from Lakshmikumaran and Sridharan attorneys. He has been associated with Lakshmikumaran and Sridharan Bengaluru for more than 6 years and has a decade of experience in indirect taxation. He is also enrolled as an advocate in the Karnataka Bar Council. His previous stint was with the Big Fours in the indirect tax service line, and he has completed his articles in taxation service line, including corporate tax and international tax. We are absolutely glad to have you here with us today, Mr. Vishwanath. You can take it forward. Thank you.
Thanks, Siddharth. Thanks to WeP Web Solutions for arranging this webinar. And thanks for all the participants for joining us in this afternoon, and GST being one of the topics which has to be discussed over and over again and again, time and again. So we thought it fit to discuss few things which are the latest updates which we can provide as a part of our knowledge sharing sessions. With that, we thought today we will deliberate upon what has been told in the flyers, like the latest changes in the GST system, some changes on e-invoicing or some updates. But large part of our discussions will be more on the law, the procedure and the processes, which we thought we'll divide it into two aspects, like pre-budget changes and what is the budget proposal and how we have to align our systems and process and procedures accordingly. So with that, for those who have attended these sessions, we thought we'll try to give our share our experience and knowledge, and we can deliberate upon by way of asking questions either through chat or at the end of the session, because we'll keep this session for 1 hour and we can complete this session within 1 hour. So by and large, the main focus area will be of the law or the legal changes. Kindly adjust the volumes in case based on your hardware requirements. So kindly note that. With that, we thought we'll directly get into the session. Few things we thought we'll discuss today. One is the latest changes in the GST system, which is mainly the GST common portal, gst.gov.in. Few changes, where you are filing returns or registration processes, all those things. Couple of things which we thought relevant, we'll discuss it here. A few updates from GST e-invoicing facility as well. There are certain facility which they have enabled, and GST law and process, like pre-budget changes are critical to understand the budget proposals and how it impact over a period of time. Once the proposal comes into act and after act, some couple of notifications has to be issued, few notifications has to be issued, and how it will impact the business process and how we should get ready from a process point of view, from procedure point of view, and also from the law point of view. So we thought we'll quickly touch upon all these aspects which will help the audience. And those who have not attended the session, maybe you can discuss it out and you can deliberate upon amongst one another. So with that, few changes in GST portal. First of all is like, once e-invoicing has been introduced, now we all know that the data is getting auto-populated rather. The auto-population of the data or the data from e-invoicing is getting into GSTR1 and it is getting auto-populated. What advisory or what the portal update recently is that on the right hand or on your screen, you can see how the data is getting auto-populated. So for those who are which is for the first time, you can see how what actually the data gets from where and which table it goes and sits. So the data how we are entering. So the data entry is the key point. If there is any mistake in the data, it will go to the wrong table. So those things you should understand. That is where the major clerical error can happen. So what data you enter goes into which column of the table is clearly depicted on your things. Therefore, there's no new update, but update what is important is that advisory what they're issuing is when they pull the data from e-invoice to GSTR1, there are certain delay or while pulling the data of e-invoice into the GST system, some details of invoices are not getting populated is what the advisory says or update says. So what they have requested the assessee is to ensure that your GSTR1 B2B data, at least if it is not retrieved from e-invoicing, you have to manually enter those data. So those aspects has to be considered before we file GSTR1, and today is the GSTR1 due date also. And I hope you are attending this session after filing the returns, or you are going to do this after the seminar. So thanks for those who are to file, and in the busy schedule you made it for this session. So with this, this data is, if it is not getting auto-populated, kindly check and you can enter the data on your own. That's what the advisory says, and that is important. There can't be any duplication further, because it should be in a way that IRN data should be already captured in a GSTR1. Therefore, ideally, there should not be any duplication of the data. So the duplication of data, you need not worry, because the GSTR once you filed, it be foolproof. So to that extent, there should not be. So instead, you kindly go ahead and proceed with the prepared filing of GSTR1 is the one of the updates. So a couple of points in these slides. Ensure that the data is captured properly at the time of e-invoicing itself, so that the correct table it goes and sits, because it will be very difficult after once e-invoicing is generated and 24 hours is left to get it cancelled, etc. So this is one of the update. Second of the update should be that the QRMP scheme, quarterly return monthly payment scheme, which has been affected already from 1st Jan. One of the update apart from what is shown in the slide is that you can opt for the QRMP from today onwards for the April to June quarter. So from now onwards, the window is open either to opt in or opt out. So for those associates who have got the registration from 1st of February 2021 onwards, we recently registered, for them also, you can opt in and opt out for the April to June quarter and not for February and March. So like this, a couple of things are there. So kindly note all those points. And for the quarter Jan to March, the 31st January is already left. Maybe now that it's not possible to change the schema what you want. But what update we are trying to explain here is that the auto-populated challan is getting generated 35%. Those SSCs who have opted for QRMP, 35% of the taxes has to be paid by way of a challan. And what government has given is a pre-filled challan. A pre-filled challan is getting auto-populated, and that data will come. But kindly note, for the first quarter, there is an issue because of 100% of the challan is getting generated. Therefore, you have to enter manually the 35%. So kindly don't choose that option and make the payment, because it will lead to 100% of payment. So and because law itself requires 35%, so therefore that has to be seen. Just because it is auto-populated, we should also check and recheck before we create any challan for payment of taxes under the QRMP. And for April 2021 and onwards, the pattern will be the government is going to give as per the data, because the data will be available at that time, and 35% will be auto-calculated. Only for the quarter January to March, this this will be a little hiccup, which has to be seen, like in the sense that you have to check the data for the challan and don't go with the auto-populated data. So I hope every SSC takes care of this when the time of creation of challan. So without which, otherwise it will lead to excess payment of tax, etc. Those things has to be seen before we generate a challan. So that is one of the update. This is what I call, this update is not really an update, but I thought to share with you as a matter of fact, because I call this as a magic table, in the sense that GSTR1E, sometimes it appears, sometimes it does not appear. And what is this GSTR1E? This is basically an export data. Yesterday it was appearing, and today it is not appearing. When I logged in, I could not see, there are few things which are there, which are not there immediately. Maybe it's a back-end work which is portal maybe doing. What I'm saying is this GSTR1E data is more about export data. Export data is otherwise captured in GSTR1 table 6A. The moment you create an e-invoice, it should really come and sit in this table 6A. GSTR1E table is another table which is over and above the table which was showing in the portal. So there were a few things. Now the portal is not showing. Maybe for a few associates it will come back and show. What is important is, one way it is good to fill this data and file it off, so that the if you are claiming under LUT or refund or the data of export with payment, etc., all those things you can show through this. But in any case, you have to file GSTR1 table 6A. Filing of GSTR1 table 6A is a mandatory requirement. But however, 1E, if you file it off, This data will be an add-on data, but we have to carefully ensure that there is no mismatch between these two data. Otherwise, you can only fill one table and you can ignore the other table. However, this table is getting every now and then appearing and disappearing, etc. That's why I call it as magic table. Even in the law, there is no requirement as such for this 1E table. Otherwise, which is getting captured in table 6A. So GSTR 1 is the form, not 1E. Table 6A, which is getting auto-populated, will have sufficient data because the columns are almost the same. There will be no much difference. So this is simply a magic table. Apart from this, kindly note, which is not there in the slides, but which I'm talking and informing the assessee is that for filing LUT for 21-22 is enabled. So kindly check your LUT status for the next year, and if possible, you can file it off right away so that you will get the acknowledgement number, etc. So that at the time of month end, like we are in February, maybe March end, we may forget because we'll be having a lot of accounts to finalize, etc. There'll be busy schedule of the assessees. So you can fill it off the LUT right away if you intend to make a export under LUT from April 2021 onwards. For those entire financial year, the portal is open. So you can inform your team accordingly so that the LUTs are getting filed and there's no delay. That because any delay in filing LUT and you raise a shipping bill without LUT, which will create a bigger issues at a later point in time. So with that, this update, we hope it is useful. Apart from this is with respect to GST portal updates. Apart from this, certain e-invoice updates we thought we'll share. Like in the e-invoice update, they say that while generating e-way bill through e-invoicing, export invoice details, their ship to details you can enter now. There was some hiccup. That's not a bigger thing. Sub-users can be granted permissions. This is important. You can cancel and print. The sub-users is very important. Whom you give the license to cancel and print e-invoice is very critical because these data will be the cancellation and printing of e-invoice will be one of your requirements on a day-to-day compliance basis. So you can assign the sub-users. Kindly check the sub-users whom you want to assign these rights, and they can also generate e-way bill. So those things also, the sub-user permissions can be granted. So this permission you check to whom you have to assign it. Because if you are a assessee with multiple locations or within Karnataka and you want to give only one person control or multiple persons control over this cancellation and printing of e-invoicing, you can do so for the counter people, for those people who want to assign the rights at the stores or at the billing counters, etc. So that is B2B cases, what I'm saying. So apart from this, bulk print of e-invoicing, this is important. So instead of printing one by one e-invoice to one invoice, 1,000 e-invoices can be printed at a time. So that this will be easy and it will save time basically. Because if you still want to go from the soft copy to hard copy for various business requirements and compliance requirements and giving to your auditors or whoever, so this 1,000 e-invoices you can print at a shot, which means that your time to select and print is minimized. So these things are the small points which is important on a day-to-day basis. Pin code to pin code auto calculation of the distance during e-way bill is also getting updated. So these are the couple of changes. One of the important changes we thought is sub-users and the print e-invoice facility. So that will be useful enough as far as updates. So this is basically about the technology-related aspects updates which we thought we share. Because GST law and technology go hand in hand now because technology has become a part of GST law. So now going ahead, we'll come to the actual legal issues or the legal changes. So recent changes under the CGST rules is important, and what I'm talking is about the pre-budget issues or the pre-budget changes which one has to be aware of. So there is a notification 94 of 2020 which has come with effect from 22nd December. Few things are very, very important. Rule 36.4 is amended. Instead of 10%, now it is 5%. So we had 20, we had 10, and we are now in 5%, which means that an assessee can take credit of details of invoices not uploaded to the extent of 105% and 105% of the data on which you already have the data, which means that if 100 people have uploaded the data, so on that 100 rupee, you have an additional 5 rupee which you can take as credit, which all those should be eligible credit. Kindly note those aspects. But what is important is how do you make this amendment into your system and how you are going to change your system and what processes you have to see. What I feel, or we feel like we can cover a few things is like capturing invoice date, because this will be very important from when this is effective. So the moment there is an effective date for this from January, therefore the invoices cutoff we have to take, and we have to ensure that the invoices before this 31st of December is one set of data, and after this is one set of data, so that our auto calculation or computation logic of 105 can be calculated properly. If you're going with an ASP GST, or otherwise also if you're doing on your own, if as long as possible, you can give a report to your finance and tax team to tell them that what is the additional 5% you will get based on the invoice date. Status of GSTR1 filing is critical, because another important update is that the details furnished is not important. Mere uploading is not sufficient. Therefore, they have to file. So whether your system is competent enough to capture the data available in the GSTN or GST.gov.in and tell that the suppliers have really uploaded. So uploaded in the sense, filed the GSTR1 status, and how do you capture in your system? Those few things you may have to consider it, because mere uploading is not sufficient. Mere submitted status is not sufficient. It should be file status. That is also an important amendment. So therefore, to take credit from your suppliers, these aspects on a day-to-day basis we have to check. And kindly note this rule, and the next rule what I tell will be important in the next slides when I will be discussing. So next is rule 86B. Kindly note this utilization of credit restrictions they have enabled now, which means that you can't take full credit, which means 100% credit you cannot pay the taxes. 1% you still have to pay taxes to the government by way of cash. However, there is an exclusion category, like if a company has paid income tax, or if your directors has paid income tax for the last 2 years, more than 1 lakh, etc., or reclaimed our rebate or refund, those associates are excluded, which means that they can utilize 100% credit. But how do you change this? What changes you can make it in the system on these aspects, like cash and credit ratio? Do you have enough data, statistical analysis, or exception data analysis? Like if I fall under exception category, how did I capture? Like whether my Form 16 is sufficient, whether my company's ITR returns data, I already have it in hand on a month-to-month basis, and can I display this to my finance and tax team when they file the GSTR returns? How this information can be given from direct tax or HR team to indirect taxes team, or the taxes team, or the compliance team who are going to file the return? Because any month we may have to check the data. So if for some period, if we breach this exception, then we'll end up paying 1% in cash. And without payment in cash, there will be a problem, in the sense that there can be liability in net liability, which is paid in cash, will be attracting interest also. So like if a few systems which you can consider changes, or some information or some display information can be given in your system, you have to see. So those amendments you can see. Next amendment is about Rule 56(5) amendment. This amendment is basically to say that GSTR1 you cannot file unless you file your 3B. So this is a critical amendment, which means that GSTR 3B for the preceding 2 quarters, or for the quarterly filers, or for the 2 tax period 2 months, must be filed before you getting into GSTR 1 filing. So this is one of its amendment. Therefore, what are the system changes you can bring in? Like you can bring in from e-invoice level itself. From e-invoicing, whether the data went into GSTR 1 and whether GSTR 1 is filed, so that my 3B is having no issue. So those issues or those errors can be, which can be captured, and the data analysis or the data analytics can be given immediately to the finance and tax team. Apart from this, the screen what I'm showing is that you have not filed GSTR 1 for January. So these are the things which will come up in a later point in time, like for GSTR 3B filing, GSTR 1 will be mandatory. So what we just discussed is GSTR 1 cannot be filed if 3B for the previous year is not filed. So likewise, there is an amendment in the future in the sense to say that unless you file GSTR 1, your 3B cannot be filed from April. So these are the changes. Basically, filing or the compliance is a must. For me to pay taxes properly, to disclose and report it properly, for my customer to take credit, and for my e-invoicing formality to be completed. Like this, major revamping is happening on a compliance aspect. So kindly consider all those aspects on a day-to-day business level. Rule 138. This is important. When we talk about Rule 138, it's always about e-waybill. This amendment is pre-budget amendment is what I'm talking, where the distance of the travel distance has been increased, which means that earlier the e-waybill validity was 1 day per 100 kilometer. Now it is 200 kilometer per day, which means that you have to travel faster, or the travel distance remains the same, only the validity is getting shorter. The moment the validity is getting shorter, which means that there can't be any unnecessary delays on the travel. So therefore, we have to ensure that our transporter is made aware of these changes. If we are, if your transporter is himself is well aware, it's no problem, because the movement should be faster. There should not be any delay, because we still think that the moment we think about 650 kilometers, we think it is 7 days. But unfortunately, the distance has reduced now. I'm sorry, distance is the same, but e-way period has reduced, which means that you have to do it within 4 days. So on the fifth day, if it is still not delivered and the goods the vehicles get caught on the road, there will be hefty penalties, which I'll be discussing in subsequent slides. So therefore, what is the system changes or the behavioral changes or the process changes when we have to see, like inflow display for the travel distance, during issues if on the travel or the transporter, if you have any issues with the transporter for delay in number of days. For example, if it is 6 days e-way bill, did he deliver within 4 days? Because now it has become 3 days. 6-day e-way bill has become 3 days. If that was he able to do the delivery within 3 days, or how many transporter took more than half of the time, so that we can ask them and tell them that, see, these are the amendments in the law. You can't necessarily delay on the road, and if my goods get caught on the road, there'll be hefty penalties. So who will be bearing the burden, indemnification, etc. Those many things are there. Kindly consider those aspects. Another amendment is, there are a couple of amendments in Rule 8, 9, 21, 21. These are all related to registration, cancellation, suspension of registration. I'll not get into each one of these, but suffice it to say that Rule 86B, what I told, 1% cash or 105%, if we violate, the government has the power to cancel the registration. Forget the blocking, etc. They can cancel the registration, is what I'm saying. That is the amendment which has brought in. So therefore, whether your system is and how many vendors like this have got cancelled registration just because they exceeded 105% or 110% or 120%, and how many notices are pending on your supplier so that your credit is at risk. Likewise, our registration, etc. We have to see. So those aspects has to be seen. And what is the system changes, process changes, what you can give, like additional data points I want, like 105% how many months I took, or 110% how many months I did not take. I took more than 110% or 120. The data analytics basically is required, because government has the data of it, and immediately they can pull out the data, and one day you can get a notice to say, I'm going to cancel your registration. Show cause as to why your registration should not be cancelled. So if that they give, then your data should be handy. So for that, we do have enough data in hand, and your system or your MIS reports has the capacity to consider all those aspects. You have to check. Apart from this, let us get into Finance Act amendment. This is also pre-budget. This Finance Act 2020, because it has become an act. What we are trying to tell you is the previous year's budget, which has become an act and which has been notified by way of notifications, and many of them are effective from 1st of January 2021. So kindly note those amendments. This is that delinking of debit notes with the tax invoice, so which means that earlier there was a drafting thing in the GSTR section 16.4, which says that date of invoice should be reckoned even for the debit note for the purpose of calculating the time limit to take credit, which is September of next month, which they have delinked now. So basically now we have time limit for debit note. For example, if you have a debit note to today, which is 11th of February 2021, your time limit to take credit on this debit note is still September of 2021. So do you have enough data and systems and data points in your system to check what is the impact of the previous debit notes where it is linked to invoice? For say, for example, debit note dated 31st March 2018. Okay, the credit of which should have been ideally be taken, and or take an example of 31st March 2019 debit note, but the invoices is 31st March 2018. So if someone going with the legal language of section 64, they can always say that time limit to take credit has expired on September of 2018 itself, and you will never get the time limit to take credit. So can you challenge this kind of things? So whether it is retrospective, prospective, so many issues will come up on these aspects. Suffice it to say, do you have enough data with handy so that you can see whether your customer credit are risk on your debit notes and your credits are risk on your debit notes of the past nature. So all those aspects you have to consider. Apart from this, there is a legal change. This is nothing to do much of a system change, but you can kindly note that government can issue a notification for those categories who need not raise e-invoicing. So that is a legal change that they have brought in. So if there is any notification of that nature, will come out in the soon. What is important is the last point in the slide, 122 and 132. Now they have increased the penalty and punishment of certain offences to those persons who retain the benefits and on whose account or on whose instance the transaction has been conducted. For example, some intermediary or some professionals have guided on a fraudulent way to take credit or pass on. So even they are also they can be penalized or punished for these offences. So it goes not only to the taxpayer, it can go wide enough on the professionals, intermediaries, or many people who are indulged in the malpractice or fraudulent activities of taking credit or claiming refund, etc. So all those assessors are taken care and they are brought into the penal action. Kindly note, this amendment of 2020 is effective already. Now, this budget, what they have gone one step ahead, which I will discuss later. So kindly note, this amendment is already in force. So let us get into union budget or the proposals, what has been told on GST. What I'll be focusing is, like I told you, more on procedure and practices. Legal changes I'll be discussing on a shorter note. But kindly note, you can ask your questions at the end of the period, or you can put your questions on the chat. We'll answer it as and when possible. So what are the changes in budget now? So few things are important in budget. We'll quickly run through. So this is our agenda or the proposals, what we thought we will impact on your process and procedure. Input tax credit availment, there are certain changes. Recovery of self-assessment tax, provisional assessment, GST audit and certification. This way, each point we'll discuss in detail. So the last two points, whatever is in the tick, we think there will be some process and procedure changes which has to be considered in your ERPs or whatever software you are using. Kindly note those aspects, or either process change or there is a procedure change or some changes in your day-to-day compliance requirement or the data gathering. Those things you have to consider. How are those? We'll check one by one. Input tax credit amendment. This amendment is now saying that this amendment means there is an amendment proposed in the budget. So once it gets assent and getting notified, etc., it will become an act. But what is important is what is there in the amendment. The amendment now says that they are going to insert a condition for taking credit. What is this condition? The details of the invoices or the debit notes must be furnished by the supplier. Furnished here means the filed status and not the saved status. Kindly note this. In the statement of outward supply of GST R1, and such details has been communicated to the recipient. Though it is not registered person, they say registered recipient in the manner specified under 37. So because this was an intent of the GST Council, wherein it is not only the filing of earlier GST R1 filing was coming through rules. Rule 36.4, that 105%, 110%, 120, what we just saw and read, that was there in the rule. It was not technically coming through the act. So to overcome all those things, what we thought is they have come across through this amendment. So now this amendment is in the act itself, which means that for us to take credit, our suppliers should have filed the return, not saved, filed the return, and I should be communicated. So both things has to be satisfied cumulatively is the way the amendment is proposed. So what are the issues in this? Filed status. So are we capturing filed status in our GSTR 2A and 2B? Though it is coming in the system, do we have it as a data point in our MIS reports, etc.? So those things you may have to see. Proof of communication, whether your GST data or the GST returns data is sufficient or your ASP GSP data is sufficient. So do you have enough data points on those? How to handle wrong GST INs? For example, it has come for me, for someone else. So just because it has come, can I take credit? Or should it be corrected in a manner, for wrong GST, some other GST of my other GST entity has come to this GST entity. So whether other GST can still take credit based on this GST IN, as long as it is communicated to the recipient, not to the registered person, as long as it is communicated to the recipient is the way the language is employed. So therefore, can it still be okay without any correction on GST R1 data, etc.? That's the point you have to see. Or should there be a new condition to be fulfilled every month? Should we see that every month, before I take the credit, he should file his return, or can I see at the month end or the year end or at the September end? Those points you have to consider. What if there is a data loss? So there are multiple open questions which can come up on this amendment. So, but what is important is, do we have enough data in hand with us and to check how many vendors are doing properly GST R1 filing, and also we getting it communicated in 2A and 2B, etc. Second of its amendment is one of the critical amendment is what I can say. This is a critical amendment because self-assessed tax, the moment your suppliers or we file GSTR 1 without filing 3B, it is deemed that the assessee has accepted a tax liability. There was a High Court decision in Kabir Realty where it is said in the same way, wherein High Court told that the moment you file GSTR 1, it is a self-admitted liability. But there were certain arguments which was taken to say that the output details is only an output details, it's only a declaration. I never assessed it as a tax liability. It is my sales data, etc. But however, those decisions, if you read Kabir Realty decision, you will understand the nuances. So therefore, to bring it or align it with the law, government has bring this amendment to say that the self-assessed tax includes whatever is shown here in GSTR 1, but you have not filed in 3B, which means that they can initiate recovery immediately. So the initiation of recovery can be on the supplier also. It can be in the recipient also, because recipient, that is parallel provision that is not coming to this amendment, but suffice it to show that, say that there is a recovery under section 79, notwithstanding 73-74 notice. So there can be a 73-74 notice on the supplier. At the same time, a recovery proceeding can come on the recipient also. Just because he has not filed the 3B, as long as it is shown in 1 and we got it in 2A, 2B, it is not the end of the matter. We have to go ahead to check 3B filing also. So unless 3B is filed, there will be bigger issues. Therefore, this self-assessed tax gains significance there. This amendment gains high significance there. So kindly check what are the system requirements you may have to see for this data, and how do we ensure that so whether we have the data of supplier wise and how many payments are left, because here and now and then garnishing proceedings are getting initiated every now and then on buyers. So those aspects you have to consider. So this is the amendment which I was talking in the previous slides when I was talking about professionals and intermediaries. So now the budget is giving, it is getting into one more step to say that the attachment can happen even on the professionals and intermediaries. So earlier, what the law told is there can be penal actions on them. So penal action is one aspect of it. Second one is attachment of the property of the professionals, means are the persons who are indulged in this practice of at whose instance the benefit has been erroneously taken. So at whose instance the specific transaction has been carried out, those assessees also, or those persons will also get covered, whether or not they registered, even if they're unregistered. So many aspects are there involved in that. So provisional attachment can get into their hands as well. So kindly note, this is a critical amendment. And there's a parallel amendment, which is important, is earlier it is to be during the assessment. It can be now initiation is sufficient. This is a technical aspect. So, but yeah, suffice it to say that, there is a bigger change compared to the previous law, where as long as the attachment of the persons at whose instance this transaction is carried, it can go into their assets as well. So there can be a provision attachment on their properties as well. GST Audit Certification. So this is something, this amendment is creating a large scale impact on many professionals, in the sense that the registrations etc. are getting the certification etc. is getting removed. So in other way, what government intended to do was that the certification is self-certified, which means that government came up with this removal. What they have done is the mandatory requirement of furnishing annual accounts and reconciliation statements, that they are making it self-certification, which means that as long as you self-certified and upload it, that will be treated as sufficient compliance for annual returns. So annual return in any case 9 has to be filed. Apart from this, a reconciliation statement can be filed by self-certification. So that self-certification will ensure that self-assessment, etc. But it is always better to have a professional look at this, because there can be many transactions which would have gone ahead and missed it out during the normal course of the day. So it is always better that a proper reconciliation is made or built upon, and then self-certifications can be done. Anyway, that's depending on assessees to assessees and business needs. But suffice it to say that this certification of annual accounts by chartered accountant and cost accountant, this has been removed, and now it is made self-certification by the taxpayers on an optional basis. There's no issue; it is not a mandatory thing. So net cash liability, what is important in this amendment is that section 50 has been now retrospectively amendment, and legal sanctity is clearly given. And it simply says that from 1st of July 2017, interest is payable only on your net cash liability and not on credit. If you have credit liability, the difference of tax payable or the interest, if you have paid the taxes delayed, only on the net tax cash liability only the interest will apply. That's the bottom line of this transaction of this amendment. These two are a couple of related amendments. There will be some process change as well here as well. The reason is that earlier power to call for information was for statistics purposes, and earlier you should have been always through way of an issue of a notification. But now they have empowered the local jurisdictional commissioner to get any information on any matter in connection with GST law from his assessee. So anything he can ask. So what is important is the power to call information is wide enough. One. Second is he can disclose this information to any person. After getting from this information, he can disclose it to any assessees, any department or any person. But however, the important point to note is, we should be given an opportunity of being heard before he disseminates this information. So after he collects the information, there should be a proper discussion or dialogue with the officer. This is important, and why this is important is that unless a DIN is captured, so how business and process change you should look at from this. Any notice or communication, if it does not have DIN, the document identification number and the date, if that is captured, then we have to inevitably end up giving, and we have to give a timeline specified for replying and all. If there is no DIN, then we can always take a ground to say that there is no DIN, therefore power to call for information, though it is there in the law, it is not complying with the circular of government itself. So do you have enough systems in place or the process in place to capture all the DINs and all the communications from which you have received from the government so far, like ASMT 10, etc. So do you have enough process already in place for those? Kindly check those aspects. That will be an important point to note. So this is another critical thing. Supplies to SEZ units and developer. Earlier, there was no need for a certification as far as normal supply is concerned, apart from recent cases, normal cases, to say that the supply is always meant for authorized operation. As long as I supply to SEZ, that is sufficient compliance. However, now the law is amended to say that unless the supply is for authorized operation, which means the certification from the SEZ Development Commissioner or SEZ Commissioner or the data from the SEZ online is given to you, which acknowledge the fact that your supply either for goods or services is for authorized operation, the benefit of LUT, etc. cannot be taken. So that is important change. And do you have enough documentation already in place for this? And how do you capture in your systems so that your LUT numbers, after LUT number, the invoice number, whether you have got the response or the receipt of proof for the authorized operation, and how did you match from this document? If I take an invoice number, I should be able to trace the approval from the approval for authorized operation data. So those data should be collected so that there will not be any additional GST liability on the supplies made to SEZ and developer. So barring the refund cases, if it is refund cases, anyway, this is usual authorized operations is a sine qua non, which is a prerequisite. So that is anyway a prerequisite. So if it is not a refund case, but you are supplying it for your customers, so do you getting it for authorized operation is a critical requirement. Getting the documentation.
Yeah, sorry to interrupt, Mr. Vishwanath. I hope I can take a minute for a poll question, if that's okay with you.
Sure.
Yeah. So I hope all of you are seeing this poll question on your screen. Do you think self-declaration of annual returns by the taxpayers is a good measure for self-assessment? So I'll be sharing a few other poll questions. This is purely in the idea to keep all of you engaged and interacted. Once again, thank you all for joining. Like Mr. Vishwanath had quoted, we understand there is filing dates, and all put together, it's great to see that people have made time and made sure to stick around during the webinar. Also, if there's any questions, like a few queries we had got, please put it on the chat. If time suffices, we will definitely take it forward. So there's actually one question from Mr. Gaurav. He's asked, if self-certification is effective retrospectively or prospectively.
Means means I'll try to finish the slides, and definitely I will take this as the first question.
Sure,
We'll take
sure.
it to the Q&A.
Okay, great. So I'm ending the poll right now, and I will also put the results. So looks like it's a mixed bag of reviews, somewhere in between actually. So if you'd like to comment anything on this, Mr. Vishwanath, you can.
No, it is for the best judges is always the tax payers and the tax assessors. So I leave it to them.
Right. Okay. All right. So I'm stopping this. You can go ahead, Mr. Vishwanath.
Sure. So, yeah. So taking the discussion forward, because I'll have only another couple of 4 slides that's all, because that will be the end of the budget updates or the budget proposals. What we are discussing here is the supplies made to SEZ for authorized operation is a very prerequisite now to qualify as zero rated supply. Moment it is a zero rated supply, we can now what is the parallel corresponding changes or proposals is that you can file LUT and go for ITC refund. So that is not a hindrance here. So that's not a problem. But only problem what they are trying to say is refund of IGST paid on exports. Now option to make zero applied on payment of IGST. Government is coming up with a notification. Only those assessors will be enabled. Earlier, any assessors were able to take it up. So if I supply to SEZ, I can make the payment of the output tax and go for refund of it. However, despite it is used for authorized operation, what government is saying is they will come up with a notification. Only those assessors they will enable for refund, either for zero rate, which includes local, or it can be export also. Local in the sense it's a supply to SEZ. So those aspects they are coming up. So this is an amendment which is critical. So if you have any supplies now, so do you have enough statistics with you, or you have a ratio to say that what is my supplies to SEZ and how much is my supply on payment and without payment, and what is my ratio, and how do I ensure my old previous credits are taken care, and what do I do on the interim period by the time this budget is getting into act and getting into notified, etc. So those things you have to check and discuss and take up informed decisions. Apart from this, one more critical aspect is realization of export proceeds. Though it's a zero rated, we'll get into export proceeds, because the moment we supply, here the next amendment is about export. The moment you export, what is important for claiming the refund benefit is that you should have got the money into India by way of foreign remittance. And that is also you have to realize within 30 days from the expiry of time limit prescribed under FEMA. So, which essentially means FEMA regulations, not RBI, can denote FEMA. So, the FEMA regulations read with the time limit. Within those time limit, if you realize your foreign currency, then your refunds will be intact. Otherwise, there's a corresponding rule which is already in place, 96B, I guess. So, it's already in place, which says that if you don't realize within the time limit, they will take back, they can issue a notice for them to recover the refund already granted with interest. And the time when you get, say, after say 18 months or 20 months, you get the money, then they will give back you the refund, but they may not be end up giving you the interest. So there will be an interest cost hidden here. That is one aspect. Second aspect is obviously, our customers' payment is important to us. So your customers made a timely payment, and we can put these provisions to show that the realization of foreign currency is very important. So your credit period, like your realization repatriate dates. So those, if you want to amend into your contracts, etc., and to bring into your system, etc., you may have to consider those process change as well. So this will be a critical requirement, not only from the refund aspect, but from considering it as a zero supply also. So unless otherwise some critical changes are made in the law. So what is important? There are 3 things we told here: authorized operations and supplies to SEZ with payment, or supply a zero rated export on payment of IGST is getting restricted, or only those notified assessors only will be able to get. And realization of export proceeds is a very, very important requirement. We have to check the timelines. We have to put some systems in place to check RBI timelines, FEMA timelines, plus 30 days, and our FIRC date, BRC date, whether all these things are getting captured on a timely basis. The moment from invoice date or from my PO date, do I have a trial for entire chain of activities is something you have to look into, especially coupled with the refund also. So that is few changes. And last of the changes which we'll be discussing is more about e-way bill. So This proposals, what the government has tried to do is, earlier, if vehicles are getting caught on the road, what used to happen is there used to be a tax and there used to be a penalty. Both has to be paid by the assessees or the driver, as the case may be, and where they come forward and where they don't come forward. Now there was enough litigation on this, especially on the the technical nature or the language used in section 129. So now what government has done is, if something gets caught on the road, there's nothing like tax. It's always a penalty. So what we pay on the road is penalty, and what they have done now is the penalty payable will be 200% if the owner comes forward. Therefore, if it does not come forward, it will be 50% of the value of the goods or 200% of the tax payable, whichever is higher. So one is, so the removal of tax aspect from the notices on the road. It is always a penalty, and kindly note, penalty is payable in cash only. It can be paid through credit. That is one aspect. Second aspect is that the earlier it was in the rules. What the time limit to issue show cause notice, etc. All those things. So which means that the assessee or the officer, the moment he catches the goods on the road, he had time limit. Now it has been made in the act itself. So within 7 days, he is to issue the notice of detention, and he has to pass an order within 7 days from the notice. Effectively, 15 days he has time to issue the notices and pass an order. So that time limit is prescribed in the law. So therefore, he has to act quickly. At the same time, kindly note, penalty payable within 15 days. Otherwise, goods and conveyance will be liable to be sold. So the moment the goods get caught on the road for whatever reasons, then what will happen? Either goods will get sold or the conveyance inside lorry can get sold. That's the way the law is written, to say that the liable and it can be liable to be sold, which means that if you are not paying up the penalty, you might have to end up paying or selling. It means government has the power to sell it off and get the money, and maybe balance they may pay, or we'll see how that process will come up. Third point, they can release the conveyance. It's not the goods, they can release your conveyance, which means that your lorry or vehicle or whatever which has gone, that vehicle can be released only on the payment of 1 lakh or penalty, like I discussed, whichever is less, minimum 1 lakh, in the sense that 1 lakh or the penalty, if penalty is 90,000, then 90,000 will be their penalty. Assuming the tax liability is 45,000, then it will be 200%, which will be 90,000. So what I'm saying is, with the driver, means on a lighter side, we were discussing internally, like every amendment we discuss at our office at length. So on a lighter side, we are thinking that we have to give a lorry driver 1 lakh for the movement of goods. Because if his lorry gets caught on the road, for him to get goods released, he has to pay 1 lakh. And for what purpose? Just because there was some issue in the e-way bill or some clerical error in the e-way bill. So what is important here is a self-compliance or self-policing is the need of the hour, which means that you can't do any mistakes either in delivery challan, e-invoicing, invoices, or e-way bills. So because all the data, once it's fed, your cancellation time is 24 hours. Kindly note that aspect as well. Otherwise, a huge amount of penalty has to be shelled out. And we will end up getting into unnecessary litigations just to release the goods or get the conveyance released like this. So these are few amendments which we thought we'll discuss it out. Now what is happening is, with this amendment, 129 is a complete code in itself. So, and anyone wants to appeal now. Okay, now appeal is 25% of the penalty amount, which means that 200% penalty you would have paid. So of which 25% is the minimum penalty for filing an appeal. So this provision is critical. So kindly note this also, which means that if 200% penalty you have paid, it is 25% of the penalty amount you have to pay it as a pre-deposit for the purpose of getting it admitted as an appeal. So this will be another issue which you have to see, which will be very important. And there was a circular earlier which said that if there are clerical errors, 2-digit error, HSN error, 5-digit HSN error, all those things are condonable. Now, what will be happen to those circular? Whether government will or the patrolling officer will consider those circular and release the goods, or if he does not consider that circular and if he simply issues a notice because he has to act fast within 15 days and you will end up paying penalty, you will go in for an appeal every now and then. Therefore, whether your document or process is in place and how many errors you have committed so far and how did you rectify those errors, it's a time for everyone to relook into all the e-way bills issues which has come or which has escaped or which has not really arisen or which may arise. So all combination of cases you may have to relook and bring in proper system in place so that there will be no clerical errors or omissions or commission error. kindly note those aspects. And now this is more of a legal amendment, which will be more useful for lawyers, because unless I end up the session with some case laws, as a job as a lawyer will not be complete, is what I thought. So Synergy for TCAM is a case law, Gujarat High Court. Here, the amendment what they have made now is almost in line with the law, is what we can say. But what is important is, earlier there was an ambiguity in the language used in section 129 and 130, because both of them started with notwithstanding, notwithstanding. So what they did is, in 130, they now made it with notwithstanding, they removed it and they made where. So which effectively now also it's still, we can read to mean that the highlighted portion in 190 para. So what the High Court said that there can be double penalty. 188. So for the same offense, there can be two penal actions. So, but here important amendment is, here the penalty can be minimum 100%, which will not be less than 100% of the tax payable. Which means that there's a fine, there's a penalty. This will be 100%. So now the open questions are whether 200% plus 100% or 100% is the only penalty, or only 200% is the penalty on your e-way bill. So we have to discuss on a case-to-case basis. And if it is 300% of the penalty, then how do you overcome each of the notices and notifications? So those things is very important. So whenever, what is important is complying with the tax laws, as long as the e-way bill procedure is concerned, is become a very important phenomena, at least after this budget proposal. Otherwise, the goods we're getting caught on the road will have hefty penalties, and the litigation will continue on those. So therefore, whether systems or clerical errors is avoided or not is something that has to be seen. And this this is another critical amendment, which is more to do with e-way bill, is what I can say. Here, a proceeding can be proceedings can continue even on the driver or the owner, apart from the issues or the notices issued on the company. So, like basically, earlier there was a conclusion of proceedings, which means that conclusion of 74 or 73 proceedings will deem to conclude proceedings even under e-way bill. So that is not the case now. So that proceeding 73, 74 notice will happen parallelly, and 129, 130 notices can happen parallelly, which means that there can be multiple notices. One notice on 73 or 74, one notice is for 129 for detention, which will be 200%, one notice for 30, which will be 100%. So many notifications because of multiple act changes, so there will be serious consequences. So therefore, we thought few things which is the requirement of the or assessee should know, are those persons who attend the session. At least we can share our knowledge through this, and anything which we can consider as useful, we thought we share it as a part of this session. Therefore, we thought we can close this session with this, and we thank WeP for organizing this session.
Thank you so much, Mr. Vishwanath. That was a wonderful session. Thanks a lot. In fact, we could not put out a few poll questions, as your flow was pretty good, and it was very involving. So we couldn't do that. So I'd like to ask if you have about another 10-15 minutes, if that's okay. At the max 10 minutes. If
sure.
possible, we can take up a few queries that have come on chat. And also, I'd like to answer a few more, put out a few more polls, if that's okay with you.
Please do. Yeah.
Okay. So I'm just launching one poll. I hope all of you are seeing this. So do you think e-Invoice should be made applicable even for domestic B2B supplies, so that GSTR1 data can also be auto-populated? I'm leaving this for the next 1 minute. There's actually a few questions on e-Invoice as well, as to in terms of when is it exactly going to be mandatory. That is, there was the deadline of 1st Jan 2021 initially for 100 crore companies. And I believe now it's moved to 1st April, but I'm not sure if it's applicable to only 100 crore or anyone in general who generates B2B invoices. So if you can give some clarity on that, Mr. Vishwanath, I think it will be helpful for the attendees.
Okay, sure, Mr. Okay, I'll just take the questions on the chat then.
Okay, sure.
Or the first question,
Yeah, I'm just going to end this poll right now. Okay. Yes, Mr. Vishwanath, you can go ahead.
So before this, the first question, which I told you the first question, like whether self-certification whether it is effective retrospectively or prospectively, that question. Actually, this is only a budget proposal. Therefore, unless it becomes an act, it will be premature to tell anything on that aspect. However, considering the budget is proposing this, and after the budget or the presidential assent, only a notification can throw us a light. So how the notification is worded is very, very important. And even assuming it is going to be retrospective, there should be a definitive date which the government has to give. So ideally, it should be prospective in nature because this is a new requirement which they are taking it away. So ideally, it should apply on a prospective date, but we have to wait for the final budget details or the notification. Unless notification comes, anything which will be discussed will be premature. So that is the answer, because unless a notification comes, there can't be any concrete answer to it. We have to see the notification and the amendment in the budget or the approval from the budget.
Okay. So, Mr. Vishnu, before you take up a few more questions, I am actually putting out one other poll, which we had actually put out initially during the webinar invite. So we had actually showcased that those who are interested can get 1 month free access to our web e-Invoice platform. So if you'd like us to approach, you can definitely click a yes or a no, and we would take a call accordingly. We have a few people who had raised their hands. So if there's any questions, you can put it on the chat. Else we can take it up post-webinar. And I will be ending the poll right now. Thank you. So, Mr. Vishwanath, do you want me to bring up the questions, or will you be taking
that will be better, because there'll be chats on other things. So
definitely. Okay. So there was one question from Mr. Shivanand actually. He had asked regarding e-invoicing mandate. I think you had answered that. So that aside, there's one question from Mr. Hemant. What service recipients will be able to do if service provider doesn't deposit the GST to government, or paying the GST but not filing the return? I'm not sure if you would have understood.
See, the file, but as long as they file returns, see, the payment goes hand in hand with the filing of returns, unless they come up with this QRMP scheme. As long as the proof of payment is there with the with the buyer, like if you have the proof of payment or a communication from him to say that on your invoices you can give some declaration, etc. That's the only point at this point in time, unless there is a challenge on section 16(2)(c) itself. So unless the vice of section 16(2)(c) is challenged as unconstitutional, the impossibility of performance, because long back I already wrote an article on the impossibility of performance in 2018 itself on the same point. So you can see that, because this will be an impossible task for the recipient to check whether your supplier has paid tax on your invoice. So therefore, best way is to, unless a writ or decision is come out in favor of the assessees, so this issue of government asking the assessee to reverse the credit will be on. So therefore, what best is either by way of buyer-supplier relationship, like a supplier and buyer relationship, you can renegotiate the price, etc. Those are the better way. Unless otherwise, the GST credit what has been taken will be at stake. So, and coupled with that, there will be garnishing proceedings on us also, because the credit has been taken and payment you have made, but still he owes to the government. Therefore, your reversal of credit will be at stake. So this is like an action which has to be contested, and you have to leave it that in the sense that you have to challenge it out in the appropriate form.
Okay, I hope that answers your question, Mr. Hemant. So I will be launching one more poll, and we take up one question. I hope that's okay.
Yeah, sure.
Yeah. So this poll question will be the last one. We'd like to know how you found the webinar session, and based on your inputs, we make sure to proactively improve. In the meantime, while I leave the poll to run, we can take up one last question. This question is actually from Mr. Gaurav. Any idea when the appellate tribunal in GST will be formed?
So yeah, this is more. Actually, we were expecting this in its budget itself, but there is already a decision which is pending, in Madras High Court, or this, the issue which is already pending. We actually wanted something concrete in this budget, and unfortunately, it is not come out. So we have to wait to see the fate of it. So we are also expecting, actually we are eagerly expecting any clarity on that, because we as an advocates, we look forward to that.
Right. All right. So I believe with the end of that question, we come to an end with this session. We are sorry that we could not take up other questions, because the whole point of the session was to not take up questions. Although we will definitely reach out to all of them who would like to converse further with Mr. Vishwanath if that's required. And over the week, we will reach out to you shortly. So once again, thank you all for joining, and huge thanks to Mr. Vishwanath for making time, and yet another successful webinar. And this is, in fact, our 4th webinar together. So thanks a lot, Mr. Vishwanath. Thank you for your time, and we look forward to seeing you in the near future one more time.
Sure.
And
thanks for all the participants.
Yes. And thank you all. Thank you all for your time. And with this, we come to an end of the session. Have a wonderful evening, all of you.
Yeah, thank you.
Thank you.
Thank you.
Thank you.